Hello, everyone. Welcome to a brand new episode of One Vision, the FinTech Fuse. This is Theo, your host for today's episode. Now, joining us on the show today is someone I have known for, we're not going to count years, a while. We never actually get to have the chance to talk until today. So thank you so much for joining me. Joining us on the show again is Nektarios Liolios. I'm going to mess it up. Industry veteran from Innotribe, Startupbootcamp, Rainmaker, just to name a few. I don't think I actually need to do an intro because that's making it an injustice. Anyway, thank you so much for joining me today.
Thank you for having me, Theo.
So let's start with that. You have done a lot. And earlier, before we started, we were talking about Startupbootcamp. You're basically the one who has brought in a lot of people into the ecosystem and kind of follow you along. I have been following you on the side quietly. There were quite a few things that I have seen and I've noticed that you are very unique amongst everyone else. But we'll start with the very beginning. Can you share with us what are some of the things that you have learned in the past few years? Because since Startupbootcamp and since Rainmaker, you started doing a lot of other stuff. You were advising a lot of companies. And then some recent LinkedIn posts, you were alluding to something else that you were doing. So,
sure. Well, it's kind of funny when you go into these conversations, meet somebody for the first time, and you do intros. My intro starts getting longer and longer and longer because I've just been around for longer, and because it all builds on each other. So I feel it's always relevant to mention. And at some point I go, is it just you talking about yourself for too long? But so Innotribe for me was the beginning of a lot of things because I practically ended up starting what became the first global startup fintech competition, right? So we had Revolut at pre-Series A, we had TransferWise post-seed and all that. So this was exciting, but this is like 12, 13, 14 years ago. And Startup Bootcamp was the first corporate innovation-driven accelerator. So again, it was 10 years ago, but it was quite meaningful and exciting and interesting. And it's important for me just to make a point of a lot of the things that I was involved with quite early. And that allows you to be able to look back and go, well, this is what we've seen. This is what we've learned. It's very important to me to point out that at the end of 2018, I walked away from all of this because I was completely disillusioned with corporate innovation in financial services. So I walked away from the business that I built, my identity, something that we had taken literally globally, because I thought the banks and the insurance companies will never do the difficult stuff. They only do the things that look good on an annual report, where you can get a lot of marketing value out of this. So everything I've done since has kind of been formed and shaped by this experience. And even now, I sometimes get dragged back into conversations about innovation and trends. And I go, it doesn't matter because you're not going to do with it anything anyway. Going to all these conferences like Money 2020 and Cybers, and you see all the buzz and everybody wants to be in the know. And now everybody talks, of course, about AI. And 3 years ago, everybody talked about something else. And what happened to NFTs and what happened to the metaverse. And these things come and go for a lot of people who don't care about the ultimate substance behind it. So what did I do since then? I was involved in what became the first LGBT bank in the world called Daylight. It launched in the US in 2020. It was built on the premise that if you're part of a community that has very specific financial services needs, the banks will never build for you because you're not important enough and they're only built for the mainstream. I wasn't in an executive position. It took its own it took its own journey, but in the end, it also ended up shutting doors a couple of years ago. But I was still stuck with this idea of if you're part of an underserved community and you've got very important life needs that need financing, the financial services system will not give you the money to afford these because they don't understand the purpose of the money, and therefore you're being rejected unfairly. So we tried to build a company called Radish, which was a lending business for underserved communities. So if you're, I don't know, a nurse from Syria, just come to the UK, you could easily find a job in the health system tomorrow. You just need to reaccredit your qualification. That reaccreditation process costs £3,000. You don't have the money, you don't have a credit history in the UK, so therefore the banks don't care about the fact that you are much more likely to repay that loan the following day once you have a job, and therefore they say no. So we were building something that was purposeful. It was building it with people from the industry who were all aligned on the vision. We started fundraising pretty much the week the Ukraine war started, and therefore there was no chance anybody would give us the funding that we needed. We pivoted, we struggled, and after 3 years of trying, we had developed some velocity. We raised some angel money, and we had one investor that promised us a big chunk, and very short notice that investor changed their mind, and we were overexposed, but also by that point really, really exhausted. So we decided not to continue. So we closed, we shut it down. The thing you were alluding to, I think, is ultimately something different, which is also something that started in 2019 and launched in 2020, which is the Future Fund. So having been in the accelerator space for 5 years, launching probably about 12 to 15 accelerator programs around the world, I've seen a lot of things. And I didn't really realize that I was part of the problem when it comes to the overall mental and emotional well-being of the founders. So the Future Fund started on that recognition that when you're starting to build a business, especially when you're a first-time founder, you're not really emotionally equipped to handle everything. And when people talk about the roller coaster that is startup life, that talk a lot about fundraising struggles and finding customers and product market fit and making runway, or we're making payroll and running out of runway and all this, but nobody ever talks about what we now talk the dark side of entrepreneurship, call the dark side of entrepreneurship, which is a whole ugly bag of imposter syndrome and co-founder conflict and investor pressures and relationships falling apart. And so my co-founder in the Future Fund, Vladi, and I, we thought, let's start digging into this. Let's actually try to get people to recognize that all these things happen and they need to be talked about, and people need to find support. And then we realized that there's practically no research on the subject. There was one study from 2014, and investors don't care because we did our research. We spoke to, we both came with a big network of VC friends, people in the industry, and the majority of people in the investment space practically told us in 2019, we don't care. COVID changed this a little bit because VC suddenly had their own experience, but there's still an element of startups are commodity, it's a portfolio game. In the words of a VC partner of a high-profile firm to me, if the company fails because the founder fails, it's just part of the game. So the Future Fund was very much trying to get people just to understand what's happening, and founders, trying to get founders to recognize the signals that their bodies are sending them, that something's off, and giving them this awareness that once you've identified that something isn't working, you can actually do something about it. And that doing something about it is usually around community, peer conversations, physical health, looking after yourself, nurturing your relationships. So a variety of different things that are soft in inverted commas, but essential, because reality is that as a founder, you're twice more likely to have depression or anxiety, 3 times more likely to engage in substance abuse, suicidal ideation is double as high, and so on and so forth. So there is something that's very intrinsic to business builders that makes them different from the general population, but also allows them, because of that, to actually harm themselves physically and mentally. And we have a podcast called Naked, where we invite founders to share the story, and some of the stories have been they've been harrowing. But since then, we've also started going into the field and talking to people in person. And every time I do a talk on mental health and entrepreneurship, or any which way you want to frame it, when people come to us and say afterwards, do you mind if I tell you what I've been through? The stories I hear, and literally every single time, are hair-raising, are shocking, and they're not in the public. And this is the bit that we're trying to change with the Future Fund. And now that my FinTech company is no longer around, and I actually have now 100% of my time that I dedicate to founder support, I'm sort of looking at doing everything that I can in this space to help founders survive, navigate the choppy waters of entrepreneurship, Theo, in a healthier way.
choppy waters or the storms? I haven't heard as many as you have, but for the ones I've seen physically people working themselves to the extreme that they don't even realize, right? Because you're in the middle of the storm. I remember when I first started, there was a founder that I knew he was living on Soylent all the time. He worked 20 hours a day. He does not take a break. And when I asked him, this was when Soylent was really popular, he was like, well, because it's easy. You drink it and you keep working. You don't have to stop. And I'm like, you can't do this 7 days a week nonstop, right? And when you're in the middle of it, especially when you're in Silicon Valley, when you're surrounded by people that they all operate in the same way, it becomes like a peer pressure thing too,
Yeah,
in a way.
yeah. It's normalized.
It's normalized, exactly. Which brings me to something else you literally just brought up around COVID. Because when the pandemic started back in 2020, I still remember I came back from Berlin, and when I was in the airport, I'm like, wow, this must be a really bad flu season or something. Everyone was coughing. And of course, shortly thereafter, everything shut down for a split second. I caught a glimpse of how the world could have been when people actually cared for each other, when people were looking after each other. That glimpse turned out to be a glimpse because it kind of went by. Human nature is a very interesting thing. And I still remember back then, we were like, well, now that we're all normalized, quote unquote, and all behind is the screen in the comfort of our homes, maybe we could be more authentic. Maybe we would be willing to share more. That's when you saw kids running in the background, pets and what have you. That's when people also said, and I remember this, maybe now we can get more funding, right, into underrepresented founders, because now we are not reliant on meeting face to face in coffee shops. Well, we all know what happened then. So this is a packed question, and it's twofold. The first one goes to what you talked about, right? Founders, mental health, peer pressure. We are always brought up in a way like we have to be invincible. You can do all these things. Investors look for you because they care about the bottom line. They don't really care about you as a person. They just want to get ROI. They want to get return. Anything less is you're weak. And people celebrate heroes. They celebrate people who don't stop. But we're humans. We're humans. How do you convince people that they actually need to pause?
I'll start with the second bit. And maybe for context, we had this amazing researcher, professor from King's College on the podcast called Ute Stephan, who said, look, the very simple way to express this is there's a balance normally with normal people. There's a balance between stress and fulfillment. If your fulfillment goes up, your stress goes down. If your stress goes up, your fulfillment goes down. Entrepreneurs have this ability to be highly fulfilled and highly stressed at the same time because they've got this intrinsic motivation to build. So they're driven by something different. And they take the stress they just accept the fact that stress is part of it, but it's not sustainable. And this is where people end up getting sick, having a variety of different mental health manifestations. And the reason I kind of say this is just to illustrate what makes a startup founder different, why these people can live on Soylent, why people I've come across would do lines of coke on a Friday to be able to work through the weekend, and I thought they were going partying, that sort of thing. There is also something in the narrative that still continues to glorify the hustle. And there's this cognitive dissonance that that 95, 99% of startups fail. Everybody keeps telling that, but for some reason, because of that intrinsic push, you think you'll be the one to show that you can do it. VCs have been through a bit of a wobble at the beginning of the pandemic because they realized that they're also struggling with the same things that everybody else was struggling. But now the things have bounced back. They're back into fundraising mode. It's all about raising the next fund. It's all about looking good because of the investments that you've made. And you don't really see a lot of compassion, but there are glimpses. And there are a bunch of investors around the world, a bunch of funds who actually now talk more about what we described as compassionate investments. Like there's Flourish in the US, who've been very vocal about this. They've been leading the conversation about if you make sure that you founder so well, it will have a positive impact on the bottom line, right? But it's glimpses. We developed an educational module in the Future Farm called the Compassionate Investor Masterclass, but then we just never launched it because we ran out of runway and we ran out of energy and steam. It's still there. It's still unlaunched. But so there is something in there about fighting the narrative, and ultimately a roundabout way to ask you, when you're in it, it's really difficult to acknowledge that it's off. So when we invite people to share the story, we ask them 3 questions. Is how did you experience rock bottom? What were the signals you ignored when you were in it? Because I think that's the crucial thing, is we all know when we look back after something had gone wrong, that the signs were there, but we just chose to ignore the red flags. We go into relationships knowing the red flags will go away, and they, of course, never do it, all that. And the last one is, what are you doing to get better? And the one thing I've learned is when you're in it, it's really hard. That's why we try to get as many people as possible to talk about it, that somebody who's in it can relate and just maybe think, you know what, I'm actually in the same situation. Maybe there's something I can change now. But very often you have to hit rock bottom. But rock bottom, I mean, it sounds a bit, it's maybe not the best expression, but I can give you some examples of things that we've seen. Like a woman at Money 2020 Vegas a few years ago in a private group full of underrepresented founders and women founders, raising her hand and saying, you know what, I haven't shared this with anyone, but the stress of building my business triggered off premature menopause at the age of 32. Right? Or somebody walking up to me at an event in Australia and saying, thank you for talking about this. 5 years ago, I had lost my business, my money, and my spouse. And I was lying in a hotel room in Vegas with a gun in my mouth. So these are not frivolous things, right? These are all big things. And this is where I get so frustrated when people just brush them off as, oh, somebody's feeling a little bit sad and they don't want to come to work for a day or two. It's hard when you're in it. It's really hard. The compassion that we saw emerging at the beginning of COVID really disappeared quickly, and it sort of seems to be bouncing back with a vengeance to what it was before 2020. Because people still have the same motivations. VCs still care about the success of their fund, the returns to the LPs, and the fact that if they've been a successful fund, they can raise the next fund. And the majority of individuals I know in that space might be nice people, but when you look at the motivations, they've been driven by very specific things. So it's difficult to create space for that. I was talking to Arjun Costa from Flourish, and he was telling me, look, we're lucky because we don't have the same LP pressures. We are one LP fund, and we can have a conversation with our funder, and it's a very different story, but they're still looking for investment. So there is also, for returns. So there's also definitely something there that, is it really all about the 10x, 20x, 100x, whatever it's become now every year? It's a different number before the X. Or is there a recognition that we're killing people?
It is a very, I don't even know how to say to that. I think what you just said, though, something resonated, is these people could very well be good people, right? They're semi-decent people. They're not in there to make friends. I think a lot of them would say that. They're not there to be nice to you so long as there is a return. It's a transaction. And I think in a lot of aspects, it reflects of how we see today, right? When people reach out, and I'll be the first to admit it, when people reach out, the first thing I think of is, why are they reaching out, right? It wasn't always like, back in the old days, now I sound like a dinosaur. When people reach out, you actually want to talk to you. Like, I've been wanting to talk to you. I just never did. Poor excuse, but there are a lot of people that, I wanted to reach out to and actually get to know better. But I'm also an introvert, so there's only so much I can take, especially in group settings. I would go to like a big show. You'll see me for the first day, and then I'll disappear. I'll be around, but I'll disappear. You won't see me because I can't mentally handle it. But I know my limits, right? And it's a privilege, and it's also because I had to work through a lot of things through the years. And so it's part of it too. You mentioned earlier, I know my thoughts is all over the place, but when we talk about technology, we talk about things bringing us together. And I think oftentimes the flip side is that it also disintegrates some of the trust that we had back when everything is face to face, when you could see people's reaction and body language and all of that, isn't it? Or
So
is it just me?
no, it's absolutely not just you, but there's a couple of interesting things that you put on the table. Let's stick with the introvert a little bit. There is something around the current culture around VC, the current startup funding culture is really built for privileged extroverts. If you're from an underrepresented community, your chances are a lot slimmer. But also if you're an introvert, your chances are a lot slimmer because you're expected to be able to jump on a stage just like that, give you a 90-second pitch on a stage, just like that. Mm-hmm. And there are people who are quite vocal about the fact that, but there's even VCs who are introverts who are actually quite vocal about this. But it's not a system that is giving people the same opportunity, and it doesn't mean that other people's ideas, business models, ambitions are lesser, but the system is just not set up for that. Mm-hmm. The second thing in all of this, which I thought you were leading to this with your question, and then you took it a slightly different direction. We met Michael Freeman. Dr. Michael Freeman was the guy who wrote the only study that we found in 2015, and we had him on the podcast twice. And on the first podcast, I asked him at the end of the conversation, what is the one thing you would like to leave your audience, our audience, with? And he said, look, it's very simple. Do you care about entrepreneurs as people? Right? And I think we can link this to what you said about the way we used to talk to each other before. There is something that if you care about your counterpart as an individual, as a person, as a human being, you communicate with them differently, you build a different level of relationship, you build a different level of trust. And things have become a lot more transactional for a number of reasons. I actually think that technology can allow you to do this if you use it like that. You can have a trusted conversation with someone without necessarily feeling that not being in the same room is a huge obstacle, but it's also how you show up. And a lot of people show up very transactionally nowadays. And for me, it all comes down to we don't care enough about each other as humans.
We don't. I think that's been proven, unfortunately, time and time again. Just look at, what's transpired this year, right? In the United States, look at what transpired the last few years around the world. Look at the world that we're sleepwalking into. It's almost like you can see the freight train coming with the lights. And you're like, okay, we've seen this movie before. We kind of know how it's going to play out. It's up to us to stop it, but okay. I can feel the tensions, like being here, right? Right outside AC, I could feel the tensions in my circles of friends. I can feel it in my neighborhood. I can feel it when I walk outside. So going back to where we were when you first started, we talked about innovation. We talked about corporate innovation. We talked about how I laugh because some of these reports that I read, right, that talks about, how this particular new technology is going to capture this big of a place in the market. I'm like, wait a minute, we've seen that. You just replace it with a different word, exact same recipe, almost same infographics and so on. Are we destined to just keep repeating that?
Depends who the we is, Theo. The industry, absolutely. I do think, people have always been talking about, oh, these startups are coming here to kill the banks. And you go, no, the startups are not going to kill the banks. The banks are very perfectly capable of doing it themselves. Exactly. The startups are just taking little by little slices away and doing it better and more meaningful because they actually understand about how to use technology, and they understand ultimately the customer's needs. Sitting in a room with treasurers in 2012, corporate treasurers, and listening to them going, why would my corporate client want to use an iPad rather than using their PC with a dongle? And you kind of go, well, have you spoken to them and have you asked them? Right. And we fast forward 13 years and not much has changed. So there is something in there about the big systems are built for the mainstream, and they will be able to continue providing basic services until they're no longer needed. The one thing they don't realize is that they still have the trust, and they don't capitalize on that, and they try to compete with the people who do things just better. And you kind of go, you know what, little by little, you will disappear, and that's okay, right? If we look at where wealth creation comes from, where job creation comes from, it's not from the establishment, because they're just incapable of turning the ship around. And this comes down to two very basic things. It's shareholder expectations and it's governance. And I don't know of a single bank, large or smaller, who has the right incentive structures to actually get their senior leadership to do the new stuff, right? So that's fine. Let's just not pretend. And if they come full circle and now they're all getting back into, oh, maybe we should have our own accelerator. And you go, seriously, are we back in 2015? But yeah, that seems to be the case. I mean, I had somebody pitch to me the other day this concept of a corporate accelerator. I'm thinking, is this really happening? You came up with this idea. But yeah, fine. If that's what you think it is, it needs to be fine. And if you need to replace, as you said, Theo, replace the word, fine. So the first Monday 2020 in Amsterdam after COVID was like a hybrid affair. And our common friend Liz Lumley invited me to be on a podcast that was recorded live. And I was in a room with a senior person from Citi and a senior person from MasterCard. And I don't know why she invited me, probably just to be a little bit more controversial. And she opened the conversation by asking these people what the new trends were that they saw, or what the takeaways is. And they both, by the way, they both were sitting in this booth with their corporate comms minders, chaperones outside. And they did the thing that we're expected to say. And my first sentence on the podcast, but also my first sentence after having decided to be publicly back in FinTech was, who the F cares? Because ultimately, that's the whole thing. It's what you do with it. Tell me what you do with the latest technology. Tell me what the business models that you're changing are going to be fueled by this AI thing that you've just discovered and that we used to call big data 15 years ago, right? So there's all that, and you kind of go, I'm too old for that. So yeah, history repeating, absolutely. But you know what? When the neobank started in Europe, and you had people going, oh, Monzo hasn't made any returns, so it's losing money, or what, Starling, et cetera, et cetera. And you go, you expect these companies to be profitable and successful in 2-3 years, where a change request within your own bank would take as much time to get through, or like a mainframe update. And guess what? Some of these things have proven to work, and some of these companies are now sustainable, and that's fine. So there is something about the impatience of the large institutions for other people to do things fast, but the comfort that they have that being able to go slow, and that's fine. And I'm generally not too worried about the consumer, be it a business consumer, an SME consumer, or a retail consumer, to get the service that they need. They just find it wherever they can get it.
Yeah. I remember there was a joke, it's been quite a few years now, when we look at the corporate innovation rules, typically they have about 2 to 3 years shelf life, and then they change over, and then they wonder, wait, we hadn't done anything. Well, let's restart. And then that applies to one of the prior roles that I had as well. And it's comical to look back, and it's like, you haven't changed a thing. You think just by changing your logo, how the program is called, perhaps change out 1 or 2 people, you're going to actually make it work. It doesn't work that way. But,
having conversations with senior bankers and them saying, oh, these startups are just not bank ready. And you go, okay, how about you think for a moment, what are you doing to be startup ready? And people go, what do you mean? And goes, once the handful of banks who are actually pretty good at doing this, they have sat down and figured out, what do we need to do for the other party to be able to engage with us? How do we change our procurement process to make it easier to collaborate? Or how do we bring in the compliance people on board from the beginning? And stuff that nobody thinks about. But you know what? You can only preach so much. If people don't want it, it's fine. You don't waste. One thing I've learned in innovation, in early days of innovation, is you don't waste your time with detractors. You just run with the ones who want to run with you.
Isn't there a saying? I don't know how to say it in English, but my mom used to tell me this: you can't lead. I think like you can't lead. We call it a cow, but I think the English saying you can't lead the horse to water, and force it to drink if it doesn't want to. Right? You can only take them so far. So knowing what you know now, this is funny. I feel like we should do this actually in person over like a fire or something, in the evening when we're all chilled. Knowing what you know now, would you have done any of these things differently? Because I've asked this to a few people. Some would tell me they wouldn't because the trajectory, however, whatever road that we took, help build up the lived experience that we have to how we draw the conclusion. I think there were a few things I actually personally would have done differently, but what about you?
So my new business focuses exclusively on people because at the end of the day, it is all about the people. So would I have done anything different in my profession narrative, in the way I started things, finished things, walk away from things? No, because they were always done with the right intentions, the right motivations. And some of these were obviously experiments, but I didn't know it at the time. But a lot of the stuff that I've been involved with were quite pioneering, so they were bound not to be the best version of it, but at least we gave it a go. Right? It was the same thing with Innotribe, which was all experimental. Oh, let's figure this out. Or Startupbootcamp as the first attempt to do real corporate innovation-led acceleration. But even that kind of radish was something that was new. So I don't regret any of this. If I were to do things differently, it does come back to the choice of people that I did this with. So there are people that I look back and go, I keep telling my friends, when you see like friends who are dating, and you go, if you see a real red flag, it's never going to go away. So don't engage. But stupidly, I did in my professional life, thinking that I'm old enough and smart enough or whatever to be able to manage it or navigate this. And even in the last business, you kind of go, we started off with the right intentions. We saw friction. We thought we can work through it. And maybe I hung in there a little bit longer than I should have. So for me, it's all about people. The decisions on the businesses, I stand by all of them, and I learned a ridiculous amount from all of them.
Parting words that you would advise the founders to focus on?
Now, nothing's changed there. This is something, okay, hang on. So this was the question that I would get from the very early days is, what advice would you give a founder, right? A founder is, what hasn't changed is solve a problem. Don't build a business because it's a great idea or it was an interesting MBA project. You need to be solving a real problem. The second advice has always been, listen to the people around you. For me, it was always interesting to work with founders who were open to feedback. If they're not open to feedback, if you really think you figured it all out, then chances that you succeed are going to be very, very small. The thing that is new to it is look after yourself. Figure out how to look after yourself, because it will affect you in ways you will never predict. And part of it is community. And the one thing that is really interesting, which also come out of Ute Stefan's research, is that founders have got this ability to isolate themselves gradually because the business always comes first. And it shrinks from acquaintances and random people to remote friends to closer friends to family. And in the end, a lot of people are alone. And I was on a podcast, I was at a conference in Greece a couple of weeks ago on a fireside chat with a founder who's built, well, he's sort of behind the kind of the new Greek, the first Greek neobank. And he said, the longer you walk, the longer it gets. And it was quite an interesting statement, because it's also a reflection of, it gets lonelier because you allow this to happen. It doesn't happen in isolation. So I think the looking after yourself and don't give up your community, your support network is super important. So that would be the third thing I would add to advice to founders.
I think that's actually the most important thing. Because if there's one thing that we had learned in the last few years, is that you can't do it alone. No one can do anything alone, right? And to be able to get through the ups and the downs, most importantly, you need someone there. So go for that. And thank you so much. I hope this is the first of many more conversations to follow. This is actually, I know this wouldn't come out right when we actually publish the podcast, but this is the first conversation I have this morning, and this, when we record this, being a Monday of the week, of a very, very long week I've had last week. This is amazing. So thank you. I appreciate you. And I hope we can actually get to do this in real life, in person. There are stories to tell and stories to dive into. But until then, for the rest of our listeners, thank you so much for joining us for a special episode of One Vision. And we'll talk to you next week.